Most people think inflation is a bad thing, but what if I told you that inflation could actually make you wealthier if you owned property? Hi, welcome back. My name's James, and if you're new here, this channel is all about helping property investors build and grow their knowledge about property investment throughout the UK. My aim is to help you become a more educated property investor so you can mitigate mistakes and reduce your risk, all without gimmicks or unrealistic promises. Remember, don't forget to hit like and subscribe to the channel. But let's get started. In this video, I'm going to show you how inflation works and how you can use it to your advantage when investing in property, especially when using interest-only mortgages. We'll discuss what inflation actually is, why it's important for you to understand it, and we're looking at an example of how inflation can work in your favour when you've used mortgages. So, what is inflation? Inflation is essentially the steady increase in goods and services over time. The government and Bank of England aim to have inflation in and around the 2% mark every year. This means that every single year, the cost of goods and services are increasing by around that 2% figure. In recent years since COVID, you've probably heard a lot more about inflation. And the main reason for this is in recent times, inflation and interest rates have been significantly higher than what we were used to for a number of years. Day to day, you'll see this when you're doing things like your food shop. The average price for a loaf of bread has gone up year on year on year, and that is because of inflation. Compare this with the average loaf of bread in the 90s, the price difference will be significantly different. And not only this, if you're not getting a pay rise in line with inflation, you're actually becoming worse off every year you work in a job if you're not having your salary increase. This is another reason why we don't necessarily want lots of savings in a low interest savings rate, because inflation is essentially eating away at your savings year after year. So all this being said, which is pretty negative on the whole, why is it typically a good thing for property investors? The first reason is property generally grows in line or faster than inflation, which means your wealth is either keeping up or growing faster than inflation can eat away at it. Not only this, the rental income that the property produces often increases in line with inflation. That doesn't mean you have to increase your rent every single year. If you've got good tenants in your property, they're paying on time and they're looking after the property as if it was their own home, then you might not increase it every single year. But they might move out after 3 to 4 years, you can then jump the rent by 10 or 12%. Not only that, one of the biggest reasons that inflation works to your advantage as a property investor is when you've got debt on the property. If you've got debt, i.e. a mortgage on your property that you bought for an investment purpose, that debt is going to stay the same on an interest-only mortgage. Let's just say that is £150,000. That £150,000 debt is going to stay at £150,000 on an interest-only mortgage, and you only pay the interest on that debt. However, if inflation stays at 2% a year for the next 10 years, then that £150,000 will actually be worth around 20% lower in 10 years' time, even though the actual number is exactly the same. This means that over time, you essentially owe less money back to the mortgage companies. Yes, it's the same amount of money in terms of a figure, but the real value of that money has dropped quite significantly. Now we understand what inflation is and how we can use it to our advantage, let's really look into how we can maximise the success of our property portfolio with both inflation and leverage. If you don't yet understand what leverage is, it's essentially buying with a mortgage. I have done another video on that already, and I'll put a link to that video in the bio. So, we've got debt on the property that stays the same, that inflation eats away at every single year, and then we've got a property growing in value over time. The easiest way for us to see the real benefits of this is to look at an example. Let's take John, for example. John has decided to buy a property in Yorkshire for £200,000. He's put a 25% deposit in, which is £50,000. He's paid a bit in fees for things like stamp duty, legal costs and broker fees, but he's mortgaged the rest. So he has a 75% loan to value. The loan to value is essentially the amount of mortgage you've got on the property. 75% is pretty normal because you've put a 25% deposit into the property. Because John has targeted an area that is primed for long-term capital growth, he's bought at the right price in the right area, that property is likely to grow quite significantly. If we look historically, the average property in the UK usually doubles every 10 years or so. Again, touching upon previous videos, it's unlikely to do that in places like London and the southeast, but if we target the right areas, we can be confident on strong long-term capital growth. So, 10 years time, John's property that he bought for £200,000 is now worth somewhere in the region of 400k. If we assume that John hasn't released any equity from the property in the time that he's owned it, his loan to value has now decreased from 75% all the way to about 37.5%. This means that he now owns a significant amount of equity within the portfolio. Not only that, but the debt that John has on the property is still £150,000. Over the last 10 years, inflation had been 2 or 3% a year, let's say 2% for this example. So the real value of the debt on John's property has actually decreased by 20%. So not only has the debt reduced over time, the value of the property has increased and John has maximised his return on investment, and that's if we ignore the rental income and rental inflation. So this is why inflation and leverage together can be a match made in heaven. Remember though, this only really works if you buy it in areas primed for long-term capital growth. We need that capital appreciation of the asset over time to really maximise our returns. And the chances are we're probably looking to release equity to scale the portfolio unless you're in a position which you can save deposits pretty quickly. Also, remember, do not over leverage. Get to a point of debt in which you're comfortable with and utilise that as best you can. You'll see a lot of things in recent times where so-called property experts keep talking about how buy-to-let is dead. And the truth is, it's because they don't understand topics like this. It separates the casual buyers to the real property investors looking to build and scale their wealth through property investment. Yes, gone are the days in which you become an accidental landlord and hold that property forever. That's probably not the way to do it now. But if we can utilise topics like inflation, leverage and buying in areas that are primed for long-term growth, we're going to maximise our returns and build our wealth over the long term. So remember, don't fear inflation, learn to utilise it to your advantage. Remember, if you don't know if an interest-only mortgage is right for you, then speak to an expert who knows what they're talking about, or speak to a mortgage broker who specialises within investment property. And if you don't have a mortgage broker that you've used in the past or that you can rely on, then comment mortgage in the comments and I'll send you over someone who's very good. So, there you have it. If you want to build a long-term property portfolio, inflation actually helps you. Topics like this can sometimes take a little bit of time to get your head around. So understand it properly, take your time, and then make the right decision based on you. And again, if you don't have the time or don't have the knowledge to do it, then we can always help you here at my business, Favour Property Partners. But that is it for today's video. So thanks again for watching, and I'll see you in the next one.